Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast. Ozcast. Simply head to ozcastnetwork.com for details.
The information contained within this podcast does not consider your personal circumstances and is of a general nature only. You should not act on it without first obtaining professional financial advice specific to your circumstances.
Paul Atherton is an ex-Wall Street advisor on a mission to help young people win back their financial power, wealth, and security. He does this by helping them understand the hidden world of finance, risk, and investments, helps them figure out how it impacts them, and to seize the opportunities to make it work to their advantage. This is Paul Street Journal. I'm here today with Paul Atherton. How are you today, Paul?
Yeah, really good, Tim. How are you?
I'm good. It's good to have you on.
That's great.
I was wondering, my friend's actually just purchased an investment property, thinking about flipping a house after a year to
flipping.
avoid the capital gains and all that, live in it for a little bit. And is it a viable option?
Well, that's more of an in-depth question than you might think. I think in any period or extended period of pretty strong growth in real estate, you'll start hearing a lot of news coming out of the house flippers and people doing fantastic in real estate. And this is true. I'm not saying it isn't true. As people do fabulously well. And I think there are some cautions and some flags that I would just like to raise. But is it a viable investment option? The answer is yes, but it doesn't mean it's viable for everyone. And I think there's some nuances that probably should be explored. So the first one is nobody gets on radio and television talking about how badly they did in real estate. You always hear that they call this in statistics adverse selection. So you're only seeing the one side of the equation, adverse in this case, the positive side. And then it really tweaks the human nature of the fear of missing out. As soon as you feel like everybody should be doing it, I've missed out. But what is house flipping? So let's define it. So essentially it means buying real estate, a house, for a short period of time, as you just mentioned, to realize profit. So you're not going to live in it. You don't necessarily care about the property, as you would if it was your own home, but you want to generate a profit. And it comes from two really aspects. And one is a rosy real estate market. So we have a booming real estate market and let's say start with and adding capital gains to the house. So this is doing renovations and various upkeep and so on. Now, and it doesn't have to be any renovations. So people do it in a booming market and they grab a house and resell it without doing any renovations. And so other people do lots of renovations. And one could argue that the renovations added no value, but the appreciation in the real estate, the market in general, is what made them the money. So what does it mean? One of the reasons real estate flipping works is why it's because of leverage, and that's a big part of it. Assuming that's a booming real estate market and assuming that you add value to the property, you make money very much because you've leveraged your value of your cash down versus what you can buy. So what does leverage mean? So let's say you go in to buy $1 million property, but you have $100,000. Well, that's all you need to buy a mortgage. Sometimes you need less, but let's say minimum 90%. So $100,000 down, you buy $1 million property. You've borrowed $900,000. So think about that. Now you own $1 million property with only 10% of cash. Now over that short period of time, let's say it's 6 months, you sell the property for $1.2 million. Now, prima facie, you made $200,000 on the million, but you haven't, have you? Because you've only put $100,000 of your own money into it. So you've made $100,000, now you walk away with $300,000, which is an incredible return. I mean, 20% is pretty good return anyway, but can you imagine walking away with $100,000 to $300,000? And so there we go. That's excellent investment over an incredibly short period of time. And this is pretty much what people do. I've seen this in many states. I have friends doing this who have done this for a long period of time in California. And I know, of course, Sydney and Melbourne were hot places. I say were, but it seems increasingly less. How much is it up to the person putting in the right amount of capital gains or the right renovations? How much is it on the property? No one can really tell. So how could you know? But I suspect a lot of people are making money on the rosy real estate market. Now, here's the thing. It doesn't come without costs, or it doesn't come without risk. So I've got 5 of them for you. Let's go through them. So what often people think is just the upside that equation I just mentioned there, which is you've made $200,000 from a $100,000 initial investment. Well, it really isn't quite cut and dry as that, because there are costs. You have lender's mortgage insurance. You only put 10% down, you're going to have LMI. There are financing costs over this period of time. There are closing costs. You've got to pay your real estate agent. You've got to pay council costs. You've got to pay upkeep costs. You've got to pay maintenance costs. You've got to pay insurance costs. And there are, of course, huge, especially in Australia, huge government taxes to take. So really, did you make that money? How much did you really make after you've taken all those costs in? So one has to be very careful when they do add in all the costs. Now, again, when these news of how wonderful people do, they tend to forget about the costs and only talk about the profit. So costs is something to keep in mind. Second is time. So an awful lot of time is spent on finding the right property, negotiating the right price, working through the mortgage details, working through your mortgage lender or your mortgage broker, a huge amount of time renovating, project managing, and then walking back through the entire process when you're selling it. That's a lot of time. And I know people have done a cost average of the amount of time it was, and they've said, it would have been better if they just kept working. Now think about that, right? And the amount of stress that's been placed on it. You will end up putting a lot of time into it if this is a venture you want to head into. Third is knowledge. Now, many people say that in a hot market, you don't need to know anything. Well, I disagree with that, because even in incredibly hot markets, there are places that are really good to buy and there are worse places to buy. So an example might be, let's say there's a new highway that's being built. Now that could be really good for the new suburb that it's emptying out very close to, because now then the suburb that it's close to might have access to all the main thoroughfares in the city, and all of a sudden the value of that properties and the properties in that neighborhood would go up. But now let's say that you are the neighborhood or a property that is right next to this new highway. So you hear all the noise from the highway. Well, guess what? Your property value is going to go down, and it's going to be incredibly difficult to sell. So that's just knowledge of the market. And I think knowledge of where prices are hot, where developments are happening, where the council infrastructure builds are happening, where the government investments are being laid out. This is really important. So don't ever go into this blindly. There's a little one I forgot on knowledge with skills. Many people get into the house flipping game, have the requisite skills. They come in with, plumbing or electricians, or they're this really very handy people and they know how to renovate the house. And the large majority of what they do, they can do themselves, or they have friends in the trade who can do it for them at cost. Now, if you're someone like me that has no skills in this game and doesn't know too many people, that's going to cost a lot. And I think you've got to be very careful. If you're coming into this game just because you want to make the money and you don't have any skills that you're bringing into it, I would have a serious another thought about it. And the last point is about having patience. And this really applies to almost all investments, perhaps all investments, but being able to wait for the right time and the right place. And I've been told by people who are in the house flipping game that the newbies thing is they get so excited about the property, so excited about starting into the housing development game, so excited about making the money that they rush and buy quickly. And guess what? Estate agents will see you coming, house sellers will see you coming, and you're going to get taken advantage. So don't rush and buy. You just take a long time and avoid. By taking a lot longer, a little bit more extra time, you're going to avoid making those very bad economic decisions. So don't rush into it. So there are a quick run through of 5 risks to avoid. Now, most of these factors, certainly I think the first four, perhaps the patience one's more universal, but the first four is a real insight into the type of game it is, which is it an investment game or really is it a business? You see, when people ask me, is that a good investment? I say, really, it's a good business if you have the right business skills. And that is, think about it. You're thinking about the cost. You have to have the knowledge. You have to have the skills. You have to understand how to negotiate the right price. You have to know how to deal with mortgage brokers and developers, and you have to know how to deal with estate agents and the cost. It's a hugely complex business. And don't just rush into it thinking you know it all, because, well, actually, it's one of those things, you learn a lot more by doing as you make those mistakes along the way. And even people that come in with a lot of expertise will still make a lot of mistakes. So is it a viable investment? The answer is yes, but it's also a viable business. No, I'd enter into it with a lot of caution unless you have that business side to you. Otherwise, there are better investments.
So it sounds a bit like a bit of a misnomer to call it an investment.
Well, no, I think it's incomplete. I think it's incomplete. And I see a lot of people saying, oh, I did so well in investment. And when I really gone through it, and when I see what those people have done, they've really run a business. What they've had is a successful business, which has a successful, quote-unquote, investment side to it. That means it can work. But like all businesses, there are downsides and a risk and stress and expertise that needs to be brought to bear. But when it comes to investment, it's the same thing. There are aspects, but you're not running a business if you're investing in the stock market. I mean, you could, but you don't have to. But real estate market to me it's an investment. And when I've seen successful people, particularly those you see on the news, I see a savvy business person rather than an investor.
Excellent. That's good advice. I'll be sure to share that around. Thank you for coming in today, Paul.
Thanks, Tim. Cheers.
Paul Street Journal.
Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.